Hello and welcome to Stocks Down Under. My name is Stuart Roberts and I'm one of the co-founders of our service. And joining me today from Perth on the morning of Wednesday, the 17th of April, 2024 is Mr. Nick Rathjen, who's the Managing Director of Future Battery Metals, ASX FBM. Nick, good morning.
Morning, Stuart. Good to see you.
Nick, now is a good time to be you because Future Battery Metals, I keep saying minerals, Future Battery Metals.
It is minerals. No, you're right. No, it is minerals.
FBM. Yeah. FBM. Remember those three letters because one suspects that good things are coming here. Future Battery Minerals at its Kangaroo Hills project, just south of Coolgardie, which makes you only about 40 kilometres from Kalgoorlie. You've discovered some very interesting pegmatites on that ground in an area that wasn't really known for spodumene. We're talking the goldfields, so the only thing that people kicking around here is for gold until now. Suddenly you could be sitting on the next big lithium belt in the state of Western Australia, and you've got a lot of ground in which to get the kind of scale economies we're looking for. Talk to us about how this project fell into FBM's lap, and then what's coming up shortly.
Yeah, absolutely. My pleasure. Well, the company was originally a nickel explorer. So, in its previous life, it was looking for nickel. It acquired the Nepean Nickel mine, which is located in this Kangaroo Hills area, but just the south of where our now lithium project is. And they were drilling one of their nickel targets, which they had a bit of a target there, and were drilling it in late 2022, just at the end of 2022, but intercepted a pegmatite, which is quite common in the area. You intercept pegmatites, but this one had spodumene, a visual spodumene, and they got it assayed, and we're able to find that it was grading really, really well and had decent thicknesses. They then backed that up with their first maiden lithium drilling program in January and got the results in March of 2023 last year, which they discovered and made quite a sizable discovery of Kangaroo Hills with a 29 meters at 1.32%, so 1.36% intercept.
That is a pretty juicy intersection.
Yeah, and it's all from shallow depths too, 20, 30 meters of depth. And what they've done, the team, we've now discovered this lithium, potential project. But then over the last 12 months, we've very aggressively drilled it out and proven now that there's something more there, and there's something more that we see a lot of value in. So we've continued those high grade shallow hits with good thicknesses, and really the last time we drilled our main part of our ground, or our best ground, was June last year, and as of last month, we've just kicked off drilling again back on our best ground. So we're getting pretty excited about that. But that's our main asset. And the secondary, we have a lithium clay project in Nevada, which we've just released the resource on, which again is filling us with a lot of confidence of some excitement and some value opportunities for shareholders there as well.
Right. This has got a few people excited other than yourself. You joined the company in October last year. Prospect Resources with the Arcadia project in Zimbabwe. You spent a bit of time with Green Technology Metals. So you've become, over that journey, an authority on lithium, and in particular on spodumene. This is the first chance you've had to run your own public company. What was it that attracted you to come and join FBM?
Yeah, look, it's a good point. I've probably visited, well over a dozen lithium projects in my time, two of which you touched on some of them, two of which, the one in Zimbabwe and one in Namibia are now operating. So Arcadia is now the second largest lithium mine in the world, only to Greenbushes in terms of size. So some really good projects there, and at a time with GT1, and which has some great resources there in Canada. What excited me to the project is, initially when I saw it, they've made a bit of an exploration discovery. It's the thicknesses. It's the dimension of what this is, one pegmatite. So you're not chasing thin, multiple sort of thin pegmatites. It's one pegmatite, which makes it very, very easy to mine, much more economic. But it's a culmination of everything that comes into this one pegmatite, which is called Big Red. That was the discovery that it's, got large thickness, it's got large width, good grade, but it's also very shallow dipping. So it's not a steep dipping pegmatite from what we know thus far, and therefore makes it very amenable to open pit, and therefore quite potentially low cost to mine and to operate in. So culminating of all those things in my experience from I've seen on other projects, that comes out generally with good economics. So it's sort of exciting. And probably the other thing is when they first got their discovery, it was very much in exploration and just initial discovery. Now, over the last 12 months, they've de-risked it. So they've really proven there's extension there. And they've proven that there's more lithium actually and more pegmatites in the area rather than just one being Big Red. So there's much more exploration upside, which kind of enticed me that, this has the potential for scale to really take it forward into development and production.
Right. Now, one interesting character who's coming in and joining you on that journey is Mr. Nev Power, which is a name will be known to many, responsible for FMG's success between 2011 and 2018, some of which was challenging times. And he's now your chairman and has made a serious investment in the company. What did Nev see that in addition to what you were saying?
Yeah, look, we're very lucky to get Nev, someone of his caliber and experience in WA mining, of taking companies and really, increasing their production. At FMG, increased their production in his tenure by fourfold and really built the business of what it is today. So he knows mining, he knows WA, and he knows growth and how to get growth. And so he knows the characteristics of a good project. So he saw what we saw in Kangaroo Hills. What I saw in Kangaroo Hills is it's a good project. But more than that, he really bought into our vision. And our vision is not only, I guess our strategy is not only to be, to rest on our laurels of what we have here. We think there's more. We think there's more upside in the area, and hence why, he saw that vision of us to go and inorganic, but go and acquire more projects, acquire more ground, again, aggressively explore it quite methodically. And really prove that this scale has, this project has more scale and more potential there. So he bought into what we have, but he also bought into the vision of the business that, particularly in this point of in the lithium cycle, lithium prices are low. They're not low for long. I've been through that cycle before. And what it is a great opportunity for us to, basically amalgamate, wrap up more assets at low prices that we think we can turn into resources and really add value to in the near term, and therefore have far more leverage to lithium when prices turn. So, he asked me some good questions, but one of them is, Nick, how do you get to a $200+ million company? And then the next one was, how do you get to over $1 billion? So, you got to have that vision that, there's definitely stepping stones on the way there, but as a company, you want to make sure that's where you're going as a goal. And you've got a plan to get there. So that's what he's really kind of bought into and committed to.
Right. A lot of investors will have the scars of investments they made 2 years ago in lithium plays that haven't worked out so well. You're pursuing a very much a straw hats and winter approach, which includes the recent expansion to the project area in the deal you did with Corazon. Talk to us about that.
Yeah, that was. Look, you're quite right. Lithium is volatile, and the key thing that I've experienced is that if you have good assets, you can weather the storms. And so that's really what we're basing and focusing on, is we have a good potential asset here that can move forward, and we want to leverage that. And so with the Miriam transaction, it really steps the company up to that. As I say, there's steps on the way in your journey, and that really kind of takes us to the next step, that we've now acquired double the land package. But more importantly, it's the right amount, it's the right ground. So, where Big Red is and where we're seeing the mineralisation of high grade, thick pegmatites for spodumene, that trends up to where the Miriam project is. And through our findings in the area and DD on the Miriam project, they have as much spodumene outcropping and the same signatures that we saw at Big Red. And so that was really attractive to us, that we say, look, there is a bigger system here, and here's one of the key opportunities, probably the key opportunity in our belt to really get significant scale here, to move forward to production. So it was quite a milestone for the business. So we've since announcing the transaction, we've been doing some work on the ground, and we've sort of been doing some additional mapping. We've got our work program. drawn out, ready to go. And so in the next, couple of weeks, we'll be coming up with an update there of, the findings from our additional groundwork there, but also some detail for investors of, just how we're going to take it through that exploration phase. But the key thing with Miriam is that they've already done some work when we acquired it. They've done soil sampling, they've done geophysical work, they've had outcropping that they've tested for mineralisation. So they've done a bit of the hard yards already that have identified walk-up targets. So we could go in there today and once we've got the project, just drill some of these targets immediately. So there's a lot of short-term catalysts with the ground we're acquired. We're not starting from a grassroots position. So it's a bit more advanced, something that we can really add value to and get value for our shareholders in the short term.
Right. And in the last few weeks, we've actually been seeing better times for the commodity. It turns out that the prices, where they're available, are bottoming compared to where they were a few months ago. So now is a good time to be getting these results.
Yeah, exactly. Yeah. I mean, there was definitely an overreaction, as there always are in markets. We've now seen a bit of rationalization occur. And yeah, you've seen the lithium price stabilize and slowly tick up. And probably the options, from a number of groups have identified that price discovery here, that prices aren't as bad as what people thought. And, you're talking about 1,200, 1,300 for spodumene. You're starting to come into some what I would call attractive levels for pricing. Obviously, there's significantly, higher historical recent prices, but you start to come into what you see as reasonable pricing that is attractive for companies like us. So we're seeing that market turn, and look, we don't have a crystal ball. We'll see that play out over a period of time. But with the capital raise we did when we acquired the Miriam transaction, we've got the balance sheet to not only develop these assets and potentially acquire some more, but we've also got the balance sheet to weather the storm for a period of time. So, we're in a strong position to see the cycle transition and then, again, see the uptick and generate the value.
Right. When I look at a list of the 20 truest believers in lithium, top of the pops is Joe Lowry, Mr. Lithium himself. But
Yep.
I like to joke that in the top 10 is Mr. Nick Rathjen of Perth. What attracted you to lithium as a commodity, which is you've worked in a number of companies over a number of years in this space?
Yeah, it was, we crossed paths many, many years ago, over 10 years ago, when I was in broking, working for a large broking house. What is that the most long-term sustainable growth comes from structural growth, where there's a fundamental change in an industry or a particular business. And what really attracted to me is this EV cycle and this EV transition. And, probably the last cycle, 2018, EVs were only just starting to occur. And, people were still there was a lot of interest in it, but the industry hadn't formed the supply chains and the infrastructure wasn't really built. Fast forward to today, the billions / trillions of dollars that has been invested from the whole supply chain. You're now seeing EV vehicles transition from 1% of new vehicle sales to 6, 7, 8%. Now we're coming into that mass adoption period over the next 10 years. So it's really more that there's a strong tailwind here structurally with the growth of EVs that it really provides a strong demand curve. And really then it's on the companies, FBM, to find the right assets that fit within the lowest part of the cost curve that we can, and the best quality assets, so that, as with all industries, we can sort of see ourselves through those cycles. And you pull those two things together and, you develop these assets, and it can culminate into generating a lot of free cash and a lot of opportunities to build a larger business, which you've seen with Pilbara Minerals and many others. So that's sort of the cycle that we've got to go through. We're transitioning out of exploration, looking at how we get into development and move potentially into production.
Okay, Nick Rathjen, good luck with the next lot of assays coming back to you from the Kangaroo Hills drilling program. And here's to the next stage of the journey for FBM.
Thanks, Stuart. Appreciate it.